And joining me now is Faheema Adia from Momentum Securities to give us her take on the market's activity. Thank you so much for your time, Faheema. Now, let's actually start off there on the currency front, because the rand has been running and inching higher and higher this week. For most of the week, it was hovering around 17 Rand 50. I mean, even now, not too far off, although we have seen a little bit of weakness just under 17 Rand 60 against the US dollar. Is this rand strength or dollar weakness, or both?
Good afternoon, Zanati. Thanks for having me. Yes, I think it's largely due to the dollar weakness. I think the trade tariffs and the uncertainties related to that is having an impact on the dollar. And also Trump's passing of the big, beautiful bill, which actually passed Congress on Thursday, and it was approved by the House of Representatives as well. And that bill is expected to do things like cut taxes and also increase expenditure in the US, which could increase that budget deficit quite significantly over time. So I think a combination of those factors is just putting pressure on the US dollar and in turn strengthening the rand.
All right. Well, let's take a look at what is happening in terms of company news on the JSE. Reinet shares down about 6%, over 6% or almost 7%. Yeah, almost 7% at the moment. And this is, of course, a continuation of the slight losses we saw in yesterday's trading session. I mean, we've been getting updates from the company almost every day on the what was before the potential disposal of its stake in Pension Corp, but now, of course, coming out with an announcement that they actually are selling their stake. I'm wondering, because there'd been a lot of positive sentiment. We'd seen the share price rally for about 2-3 weeks, but now this kind of dip that we're seeing in the share price, is it signaling anything about investor unhappiness with this deal, or maybe just people deciding, you know what, everything has been priced in and we have made all the gains, so now it's time for us to take money off the table?
Yes, I think it's exactly that, Zanati. I think there was already a lot of media speculation regarding this deal before any official announcements went out, and investors had already bought this a few weeks back. And now that it has rallied, I think, enough, and official communication has been put out regarding the actual value of the deal, it's probably just a case of some profit taking now, just to realize those profits.
Yeah, and actually, what do you make of this deal? Because wasn't it their only asset?
So yes, Reinet has already disposed of a few of their assets in the past. British American Tobacco was their largest listed investment. The PIC is actually their largest unlisted investment in their portfolio, so it actually made up about 50% of their net asset value. So they are getting about £5.7 billion from this deal with Athora. What will be interesting to see is where they will redeploy the capital, because they've already got quite a bit of cash in the business from the sale of British American Tobacco. And what's really now left in those portfolio, I'd say, is largely unlisted smaller investments. So it's quite interesting to see this move where they've sold their largest unlisted investment. And I guess the question just is, where will they be investing this money going forward?
And does this then paint a good picture in terms of their NAV, discount to NAV?
Yes, so the deal was actually at quite a good premium to what the PIC holding was trading at in terms of its NAV that was listed in the last financials of Reinet. So from that perspective, it's a healthy premium to that. And we have seen that discount to NAV now narrow on the back of the disposal of the PIC. So that's definitely been beneficial, I think, for narrowing the discount to NAV. But there does still remain some discount there to the unlisted investments that do remain in the business.
All right. Another one that was quite interesting for me, Faheema, is Bytes, because it's finally back trading in the green. I was actually talking to some analysts yesterday because it had no movements yesterday after that slump we saw of almost 30%, I think two days ago. And yesterday it seemed that there was a little bit of a pause, but finally today I actually saw it up about 3% this morning. Are we seeing some bargain hunting here?
Yeah, we saw a slight increase this morning, but unfortunately it was off a low volume of shares.
Oh.
Could be some bargain hunting. I mean, it was a massive sell-off, like you said. We saw the share price down almost 29% about 2 or 3 days ago, and that
Yeah.
was just driven by the results that they released, which showed lower expected operating profit after a bit of a slowdown in the UK and less demand for from some of their corporate customers there. But it did seem like a massive overreaction. I mean, to see such a huge sell-off on one day. So I think there may be value there, but unfortunately, not much significant recovery though yet.
Yeah, it looks like it's going to be quite a slog for it to get back to those levels pre the slump from 2 trading sessions ago, because even now it's reversed some of those losses, up just 0.64%. Well, Faheema, before we get to your stock pick, let's take a moment to touch on what your industry peers have found interesting.
My stock pick for today is Motors. I mean, when I was looking at the vehicle sales, which came out a day or so ago, one of the narratives that comes out is that the Chinese are here and the Chinese are killing everyone. But I think when you look through those numbers, you see the big Motors brands between Hyundai, Kia, and Renault. They've actually grown by about 25%. So basically, Motors is fighting back and has a really strong place in the market. They're not just dealerships, they've got car rental, they've got the international business, and they've got aftermarket parts as well. And over the next 12 to 18 months, you'll see them deleveraging, and they've always paid quite a solid dividend as well. So I think at this valuation level, there's definitely upside for that stock.
We're going with fintech play Capital Appreciation. They recently came out with their results. Very strong showing from the payments division. Very strong execution, increasing what they call their estate of terminals in the market, building their annuity revenue. Also very exciting developments with the Halo software payments solution. And so growing market share significantly there. The software business, a little bit disappointing, but from our perspective, that provides upside. So what you're getting is quite a cheap entry point, sub 10p historic dividend, strong dividend. It's cum dividend as well, and it's one of the few sort of more pure fintech plays out there. And they're talking about also incorporating AI into their product offering. So I think it's got room for sort of multiple growth. They are going to change the name, I think, to reflect what they do. And I think, it's still got a lot of legs from here.
Right, Faheema, let's get to those stock picks that were chosen by Roy and Rowan. Motors, firstly, I mean, the car market is quite an interesting one right now, dealing with constrained consumer pockets, tariffs, and also the competition from the Chinese automotive players. What do you make of Motors?
Yeah, so I think considering, the focus on the rental market and on vehicles, also the parts, we could likely see better performance in the next half from this one, considering that interest rates are coming off, inflation is low, and hopefully this means the consumer will be in a better position and under less pressure in the next half, and that could then be more supportive for the sales of vehicles, rentals, and also for the demand for the aftermarket parts.
All right. Well, let's move on to Capital Appreciation. It did have a strong showing in its last results, but of course we know the two divisions. Payments really was the star performer, but we did see that software division taking a dip there. And actually, I think I did ask someone about Capital Appreciation about 2 weeks ago or a week and a half ago, and they mentioned that they would like to see more consistency, because as much as there was a strong showing in this period, previously there wasn't. So what's your view on Capital Appreciation?
Yes, I think I agree with that. So the results did look good, but like you said, I think we need to see some recovery come through on the software side. It has gained market share in some of the key product categories. And looking at the valuation and dividend, it does seem attractive currently, but also bear in mind it is a fintech play with those AI advancements. So we could see more come from that. But yes, I agree. You'd probably need to wait a bit and wait for more consistent results to filter through.
All right. Well, where are you seeing value today? Your stock pick?
So my stock pick is FirstRand. I've been having a look at the banking sector in South Africa, which is looking attractive and relatively undervalued in comparison to our global peers. So the main headwind, of course, in South Africa has been the weaker growth that we face and the constrained consumer. But like I said, now that we're seeing interest rates come off and also lower inflation, we could see a consumer that's in a better position in the next half. And FirstRand is my pick in the sector because of its superior return on equity. It has good growth prospects, also a favorable credit loss ratio that's close to the bottom of the through the cycle range. Also trading at an attractive forward PE of about 9.2 times and is offering a healthy dividend of about 5.7 times. So in its prior trading statement, it also said that it is expecting its results to be more positive this year than what it previously indicated. And I think it's just looking quite attractive at the current levels.
Great. Thank you so much for your time and for your insights on what is currently moving investors' money at midday trade, Faheema. That was Faheema Adia from Momentum Securities.